Hello, everybody, welcome to my new weekly review. So today I will do it with a new weekly review spreadsheet. So we have two different types here. We have a trade journal, the trades I took, and the trades I missed. So I will go over the first two trades I took. These were for me the end of the week minus 1.6%. So I will go over the first one, Euro AUD. I will open the daily, weekly, and 4 hour. So what can we see on this trade? What I was looking at was this bullish M, first leg, second leg, third leg, third leg coming impulsive, fourth leg coming corrective, with the daily zone, lows, we went back to the upside. So what we received also then, that shoulder one here, head, resistance in the head, then the shoulder two was here, and now we are coming back at this shoulder two where we had this same highs, we expect the same low. So within that, also a natural M. So what were we seeing on this trade? We were seeing still that this was a clear impulse, correction, impulse, correction, impulse, clear correction till this daily zone of interest. So I was looking at this trade because you can see our daily zone of interest. So here we have clear resistance. We went to the downside. Resistance, nice liquidity taken to the downside. When we were above it, nice buyers, resistance, liquidity taken upside, impulsive move. Here almost a tap, impulsive move. And now we want to see that also till this daily highs or this daily TP or going more to the upside. So if I go to the weekly right now, the weekly, what was the weekly telling me? The weekly was for me a 3 out of 4 because we are still bullish. We have still that trend bullish because we had here our low and this was our new high. And we receive that impulse here, correction, impulse, correction, impulse, and again an impulse. So the clear momentum is to the upside. So what I also saw that could potentially talk me out is this descending trend line. First touch, second touch, third touch, and then this kind of head like like a bridge formation that can act like clear resistance here that can push the price to the downside. So these were the things that could potentially play against me because we are in that small range also from this weekly between these highs and these lows. But there are more positive things because you have still this trend, this low, this high bullish momentum. This was a whole correction. We don't know when it stops, but we had here also our weekly buying zone and we tapped from that shoulder one, head shoulder two, this highs of this IC where we took liquidity and we went to the upside. So the buyers were present there. So we could go to the upside. The candle close, this one was against us. This one, the fib from this low till this high was for you because we tapped here 61.80. And then the supply and demand, so I'm acting here as resistance, support, support, false break. This is all support, support, bullish momentum when we are below it, resistance, resistance, support, support. So it's a clear supply and demand zone at that zone. So we have a 3 out of 4 for that long. So if I go now to the 4 hour, what was the mistake I made here? The mistake I made here was that we didn't had a close on this 4 hour lower high. We had that close, but we went and closed below. But in my back testing, I saw I had here at first leg, second leg, third leg, fourth leg. So we can see this as a bullish M without break of structure. But I didn't place my limit under this low wicks. So that was the problem. I was too focused on the 1 hour and the 2 hour when I had here 1 hour close. And then I saw this as a shoulder one, head, shoulder two within that a bullish M pattern in pattern. But that was not the right thing to do back then. So the best thing we needed to have there was a close on these 4 hour highs then you could see this as a potential shoulder one, head shoulder two within a potential bullish M, but we didn't receive that. So, and we can also see we were in this descending channel that was holding the price down, and there were still clear impulses, correction, impulse, correction, impulse. So the momentum was still to the downside on the 4 hour. Even if we had here our 4 hour low, our 4 hour low was tapped here. If we had here a horizontal line, we tapped this low. And then I was thinking, okay, now we can have that liquidity to the upside, but we didn't saw it yet incoming that impulsive. You can see this was a A, B, C correction. We went to the highs, went back to the downside, took new action from that daily and 4 hour low here. This was also the daily impulse. So we took that new action, and from there we had that shift in momentum. So this was the reason I needed to wait, because we didn't have a shift in momentum and we hadn't a small close on these highs. We didn't have that with this clear ABC correction, corrective nature that could go back to the downside. So I took this trade. Limit was on the shoulder one here below it, but this was a mistake of me. I had to place it below it, and also I needed to wait for a shift for momentum. So this trade could be prevented. So then this was this trade. So this was a 3 out of 4 trade. I could take it. I said that this is a trading error because we needed to wait for that clear inverted and shoulders plus bullish M pattern within a pattern. So after that, I was taking the second trade as a scale-in trade. Um, Even I had already running minus 1.56. I was risking minus 1.5%. I was still considering to take this trade because if I look on the 4 hour, what we saw after that, we saw here a clear impulse and a break of this previous lower high. So then you had here this clear shoulder one, this is your whole head, and then your shoulder two. I took this trade because this 4 hour buying zone was also aligning with the shoulder one. We had a clear liquidity sitting here where the price impulses to the upside when we tap it, and we had that here also. So I was in the trade, so that shoulder one here had shoulder two, and you have here also this first leg, second leg, third leg, fourth leg coming back till this zone to go potentially to the minus 27, which we didn't do because we made a double top here, so the same highs. And why was that? I was seeing this and I saw, okay, I went to the 1 hour and I saw this price coming like this on the 1 hour, coming correctively. So for me, that was already an indication. Hmm. On the 4 hour, you see it is in one, two candles, but on the 1 hour, it was more corrective than this leg. So I was seeing on the 1 hour, okay, we are coming more corrective. And then we had a push to the downside. So I placed my limit on break even to prevent that minus 3% loss because the liquidity was already taken here. So then I placed it on break even and we grabbed that new liquidity from this 4 hour lows here. We grabbed that new liquidity, new action, and uh, it just didn't tap me out if this trade was still running. So that's the reason why I also took it break even, because we went aggressively to the downside. And if I was running, yeah, then it would be still running. But for me, yeah, I couldn't take this risk because we had that corrective nature for potentially going, making that new action below this 4 hour wicks here. Then I would be out. So that's why I took the break even there. So then I will close these trades. So then I will go over the missed trades. Euro GPY was one of the missed trades. This was a winning trade. So I will open a daily, weekly, and a 4 hour. So if I look on a daily, this was a small bullish M. So we had here a first leg, second leg corrective, third leg impulsive, fourth leg coming also impulsively back, but it's a small pattern. For me, this is a really small pattern because it was made in 1, 2, 3, 4, 5 days, and it played out in only 2 days, something like that. So it's a clear pattern. What I also saw was we had a clear IC where the price likes to come back to, like a magnet, between all the blue candles. You have one red candle which works like a magnet, and you had here clear support, buyers were kicking in, then here resistance, sellers were kicking in, here when we were below resistance, sellers, then here acting as support, buyers, and here acting as support, buyers. So it's clear supply and demand zone that, yeah, could immediately grab that liquidity to go to the upside. And with that small pattern, we don't expect that the price takes too long to sit here and it would immediately go to the upside. So if I go to the weekly, did we saw on the weekly? We have a 4 out of 4. We had our trend because we had here our low, our high, and this is just a new low, but this is just an indication that we could make an head and shoulders or bearish pattern. This was clearly still your impulse. This impulse is still clearly bearish, but if you look at here, this one leg, second leg, third leg, fourth leg, we made here a bullish M. We grabbed here some buyers from this lows here. We grabbed this buyer from this ICL lows here that pushed the price up, which we did here also. And if you take your fib from this low till this high, the fib levels were touched. We could go to the minus 27 and we could grab here that selling liquidity on this weekly highs, which we tapped. So the trend was with us. Candle close. This one was really bullish, closing bullish, potentially acting as resistance or support here because we had here also the daily zone, which is aligning with the weekly, acting as support, resistance. Here we had a nice tap of that weekly supply and demand zone also, which was here resistance, which which could become support, which it did. So we have one, two, fib from this low till this high was active, three, supply and demand zone acting here as support, 4 out of 4. So we could take this trade. Then if I go over the 4 hour right now, on the 4 hour, you could see that we have here your clear impulse high, corrective nature, low impulse to the upside. This was your bullish M on the daily. So what did we see is we could immediately set our limit on this zone because we expected the price to not, um, yeah, that the price will come correctively back in some case in an A, B, C correction, which we did here. And we went to the upside and we didn't expect the price to be sitting here for a long time because we had that clear daily supply and demand zone and we went aggressively to the upside to the daily minus 27 immediately, that bigger daily minus 27. So this was a trade, and why I didn't took it was because, yeah, I wasn't feeling comfortable enough to take this trade because I didn't backtest this kind of zones and small bullish M's to take it just a limit on and, yeah, let it run. So I need to backtest this. That's why I placed it in blue. So then the next one, Euro AUD. So I will open a daily, the weekly, and the 4 hour. So everyone knows what this trade was. I explained it also in my trades I took. But if I look on the 4 hour right now, you can see that we could also take this shoulder one, head shoulder two here because we shifted from liquidity. This was a clear bullish impulse and we made that close a little bit above this 4 hour lower high here. So we wanted to take this shoulder one, this are the head, shoulder two here, and the stop loss below this wicks because it's an inverted shoulders without break of structure. So this is your shoulder one, head, shoulder two. We had here this, if I drew it like this, up, up, a little close above it without a break of structure. We wanted to grab here liquidity from this 4 hour buying zone, as you can see, supply and demand zone acting as resistance, resistance, support, support, support. And then we could go to the upside to take here some, take profit or go break even. And after that, we went to the downside and we went break even. So this was a missed trade I could take, but after losing here this trade here that I took to the upside, yeah, I wanted to be sure that I have a break of structure before entering, which I did here after that scale in, which I went on break even when we came back here, when we tapped these highs and came aggressively back. So that was the reason I didn't take this missed trade, because I wanted to see clear break of structure of this 4 hour lower high here. So then the next one, get GPY, I will open daily, weekly, and the 4 hour. So on a daily, what can we see on a daily? We have a clear bullish M. We have our first leg, second leg corrective, third leg impulsive, fourth leg also impulsive. So the conversation I had about this trade here was because the third leg, this trade was coming more correctively back than the fourth leg. You can see 1, 2, 3, 4, 5 days, and this coming 1, 2, yeah, 1, 2, 3 days back. So this was a clear potential shift in momentum. But what I didn't take in count was to look at the 4 hours. So just taking count, third leg is here more corrective than the fourth leg. So I will then go to the weekly because this is our thought process. So on the weekly, what could we see? We have a 4 out of 4. For me, the trend is still bullish. We have here our low, new high, low, new high. So we have this major bullish M. If we divide that in a smaller M, you have here your first leg, second leg, third leg, fourth leg, fifth leg is forming. So this is also clear in a bullish momentum. You can see momentum is bullish, correction, impulse, small correction on a daily, and grabbing here the liquidity from this high week, which we had here as support. So for me, everything was for me. For me, the trend was for me. The candle close, this one was really bullish closing. The fib from this low to this high was grabbing here the fib levels around here, this region. So for me, it was aligning. And also this bigger fib from that fib completion here was also aligning. And then the supply and demand zone acting as resistance, support, which is aligning on a daily. This horizontal line is for me the supply and demand zone that got respected. So 4 out of 4 to go to that minus 27 to that weekly fib completion. So if I look back on a daily, you can see this was also a clear support region for this weekly supply and demand zone. You can see liquidity was taken upside, upside, upside. So then on the 4 hour, what could we see on the 4 hour? What was here happening? So we could potentially trade a deceleration. And why is that? We have here a clear impulse. For me, this was a low, and this was a new high. This was a clear impulse. And after that, what did we receive? First leg, impulsive. Second leg, corrective. Third leg, impulsive. This is an A, B, C correction. This is a clear wave in it. And this is aligning with this 4 hour buying zone where the liquidity has taken from. And then you went to the upside. So what is here the difference on the daily? The daily was looking here corrective. This was the daily corrective flag. And then if you look on the 4 hour, we can see this is our 4 hour impulse and this is our correction. So we could actually trade this position to the upside, so this deceleration. And we have here that first candle, second candle, third candle, then the two candles in between. And then, yeah, the trade could be still placed our limit, and then we were in this trade here to the upside, taking partials at 2.5 potentially, or grabbing here that 2.5%, taking fully partials out, and then the daily TP was hit, and now we receive that for our selling pressure. So this was actually a trade we could take if we looked at the 4 hour instead of the daily only. So then the last one, GBP AUD, this could be a break even. So I will go over it. So I will open a daily, weekly, and 4 hour. So if I look on the daily, I was not preferring to take this trade because Euro AUD was looking way more good than this one, because you can see we have here an impulse first leg, second leg coming corrective, third leg is making here a more corrective leg. This can you see as one leg. So if I count the highs, this is your low, high, low, and this is also a high, low, high. But then we made here a false break with a daily candle immediately closing below this daily highs. So potentially this is a false break. For me, it's a false break, and we grabbed here that weekly selling zone, supply and demand zone, and we went to the downside. So for me, what I count is first leg, second leg, third leg, fourth leg. This is one leg then because of this false break. So we have actually a big bullish M. This bullish M is really big. This third leg is big. Fourth leg is also coming more corrective. So it's a big bullish M. So we want to receive a pattern. And why I wasn't really focused on this trade, because the third leg was coming, yeah, was how I need to say it. It was depending more days. It was, yeah, it was really forming in maybe 2 3 weeks, this candle. Well, I think 1 2 3 4 5 6 7 8 9 10. Yeah, 10 days. And this one was making 1 2 3 4 5 days, 6 days, 7 days till we traded this trade. So this was the third leg was forming in 10 days and the fourth leg in 7 days. So for me, this was already some indication. Yeah, it could be potentially not that good trade because we have not clearly that impulse correction. For me, this was then clearly your correction and also correction. So yeah, it was not that high possibility trade, but this daily zone grabbed some liquidity back in the history here also. And here we grabbed the liquidity too. So I was giving it a chance to look at it. And we can see this is clearly support. And you can see also here this shoulder one, head shoulder two was also grabbing some liquidity back in history here every time we tap this zone. So yeah. So then I went to the weekly. And what I saw on the weekly was we had a 2 out of 4. So the trend is bearish, potentially. No, the trend was not bearish. Yes, this could be also a yes, because the trend, we had here our low, high, we had here a break of it, but this is still indicational. So we went to the upside impulsively. That's why it was indicational, a bearish trend, and we broke above it, and we could act here as support because this was all resistance, 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 support. So this was your clear supply and demand zone. So actually, the trend was still bullish for me, even if I had here a cross, because I was looking at this bearish W. That could be your bearish trend, but that's not true. So you can see we had here an impulse and then a potential correction. So the candle close was actually um, against us. So this candle close was against us. So actually this was for the long. So I don't know why this was a short, but okay, I was looking for the short head and shoulders. That's right. So this needed to be a long. So a long, and the candle close was against us, this red candle, but the supply and demand zone and the trend was for us. So we had the potential 2 out of 4 because we closed still at this supply and demand zone. So 2 out of 4 to go for that long. And then on the 4 hour, what could we see? On the 4 hour, we saw here a potential shoulder one, head, shoulder two here. Within that, first leg, second leg, third leg, fourth leg, pattern within a pattern. As you can see, this wick came from a much below, from a way lower zone. We grabbed here liquidity. For me, this is a first leg, second leg, third leg, fourth leg, shoulder one, head, shoulder two, and we could take this trade. But this trade was not looking so good at the daily, so I didn't take it, but it's played out till the 4 hour minus 27 to go on break even here. And then we went back to the downside and it could take us out. So this was a trade you could potentially take to the upside. And potentially also here the scale in after this second bullish M was made to back again take the shoulder one here, head shoulder two, and then you were also back again in the trade. But I already took a loss on Euro AUD and I took the scale in there also, so I was not taking this trade anymore or looking at it anymore. So this was my weekly review. I hope you liked it, and yeah, see you next week. Bye.